Hello and welcome to this episode of Focus On with me, Kiamogetse Mosepele. Infrastructure development is vital for the growth and success of African economies. And while Africa's infrastructure gap continues to grow, inroads are being made to lessen this deficit. Today we have gathered at the Connecting Africa Conference 2024, where the African Development Bank along with Transnet have gathered to connect Africa, one nation at a time. So we've often heard that movement or logistics is very important in terms of being the lifeblood of an economy. I just want to zero in terms of the specific challenges, the specific logistical challenges that African countries are facing, and how might they be addressed through collaboration?
You know, we have, first of all, fragmentation of countries. We have 54 countries, and a significant number of them are landlocked. Which means for them to actually trade with the rest of the world, at a minimum, they have to find, logistics operations that go through other countries. We tend to have borders that don't facilitate trade. Actually, they act against trade, not only facilitation payments, but different forms of duty. And we have to understand that if we're going to have a competitive economy, our total logistics costs have to be competitive so that a product made in China or made in India landing at the coast should be as competitive to a product, manufactured inland and coming through several borders to the coast as well. So this is why we need to really work on our logistics networks, because otherwise, any production in Africa that's even, competitive at farm gate or at factory gate will never be competitive in most markets because of the logistics cost.
And just before we go, I just also would like to speak in terms of the movement of people, goods, and finances and building an integrated Africa. There are regulatory frameworks that are in place, policies and action items like today's conference, which are speaking to the inroads that are being made. But one, in terms of the AfCFTA, are we making the necessary inroads? Can we see an Africa that is developing at a scale which we are happy about? And more so, what is the room for improvement going forward?
So the African Continental Free Trade Area, for me, who's been a private sector investor in Africa for the last 25 years, is the game changer. We're changing Africa from really a market of 54 countries to a single market, which means all of a sudden, if we manufacture in Africa in one end, we can actually trade across a single market of 1.4 billion people and an aggregate, GDP of $3.4 trillion. So the opportunity is there. The African Union has set up the CFTA Secretariat, which is doing a fantastic job. What they achieved, even over the COVID period, in terms of harmonization of tariffs, in terms of rules of origin, it has actually been, fantastic. We recently saw a testing of, the CFTA framework through the Guided Trade Initiative, which included South Africa. These are good steps. So for me, I see the glass, half full as opposed to half empty. A lot is being done, but what it would take to actually be very effective is going to be the political commitment of our leaders across Africa. Let's start to think one region, one continent, and not 54 countries.
I just want to ring in terms of Transnet's picture. We understand that Transnet is in recovery. One, I want to speak to you in terms of what initiatives has Transnet implemented to change this and change this narrative? And secondly, what initiatives or measures are in place to ensure transparency and accountability while moving forward in Transnet?
Kia, thank you so much for a very important question. Indeed, we are on a recovery plan. We've entered the second year of our 2-year plan, which was at the back of a call from the president, which said that there needed to be a strong focus on not just Transnet as an important freight and logistics company on whose shoulders the economy of the country stand, but also on Eskom as well as safety and security. So from when that pronouncement was made, various structures have been established where we sit with Operation Vulindlela from the presidency. We get so much support from them. We sit with our customers. We also get a lot of support from our customers. And everyone is driving towards the same goal, which is that of increasing our volumes. We have successfully managed to address the decline in our volumes from the previous year. And we're hoping that this year, in which year we are targeting 170 million tons, that would be able to successfully implement that. And a lot of things are happening concurrently. If you look at safety and security, which is one of our biggest challenges, together with our customers, we're working on joint initiatives of addressing the very rampant cable theft on the network. I mean, in the previous year, you're looking at over 1,000 kilometers of cable that was stolen. That's the first one. The second one is we jointly look at, because also one of our problems is obviously the need for rolling stock. You do know about the challenges we had with the rolling stock that we procured from the Chinese. So is the customers obviously are helping us in some instances. The coal land, to be specific, they helped us procure compressors as well as batteries, and it was a much faster process than it would have been had we done this ourselves. From a port point of view, we have procured port equipment, but there are instances where customers have, assisted by giving us some of their second-hand equipment. I think 7 of that was deployed in the Port of Cape Town late last year. So it's a joint initiative in trying to help us turn the corner, and we're quite positive that this year moving forward, we're seeing a nice upward trajectory, and we hope to keep that momentum.
I also want to touch on collaboration. What are the measures or plans in place to foster a more collaborative environment, not only within Transnet structures, but externally as well?
Look, I mean, there's a number of things that are happening concurrently. One is the rail reform, which was approved by Cabinet last year. Rail reform allows our network to be open to third parties. So anyone with the capacity and the capability of owning their rolling stock and running it on the network will be allowed to do that. That's number one. That's a policy-driven initiative. But on our end, we have what we call the Joint Investment External Partner Selection Framework, which allows us to work with the private sector in some of these initiatives. But basically, we have a number of private sector partnerships across the entire value chain, from freight rail to the port terminals, where we are then going to be going to the market, and including properties. We are going to be going to the market to invite them to partner with us, whether it's a concession or a joint venture. It depends on that particular transaction. What we've realized is the need to crowd in private sector funding, because our balance sheet is constrained.
So I would like to touch on volume stabilization. One, you have made inroads in that part. What contributed to achieving this, and how do you plan to then leverage the progress that you've made for the future?
Yeah. So I think important, if you look at the volumes, the decline over the last couple of years. So if you look particularly around the last 3 to 4 years, we've gone literally from over 200 million tons to about 150 tons this year. But there was a steady decline. So we've gone from 216, 183, 173, and down to where we are now. At least what we've done, as you've pointed out, is that we've stabilized the decline. Largely it was dependent on the recovery plan. So the initiatives that we've rolled out across the business in terms of the operationalizing the recovery plan, that has helped us to stabilize the decline. We've seen a slight improvement in the volumes compared to last year to this year. The intention through the recovery plan is to achieve 170 million tons this year. And the way that we will achieve that is keep on doing the right things, the things that we've been doing the last year in terms of what we do in planning and operationalizing the recovery plan, taking out some of the initiatives that we've rolled out in terms of the frequency of trains, the availability of trains. Those are the initiatives that we've undertaken to assist us to arrest the decline. And if we continue doing those things, the right things, we will definitely achieve the 170 million tons envisaged here.
Now, an earlier mention in some of the panels that were on stage this morning is locomotives in the freight industry is quite cost intensive. I want to speak towards the infrastructure investment that you're allocating towards upgrading infrastructure, and in essentially, how do you plan to finance these upgrades?
Yeah. So there's two ways, and I think if you look at the history of Transnet and across the spectrum in South Africa when it comes to infrastructure, there's been a general decay, a deterioration of the infrastructure. We are literally addressing or reversing the impact of that. So what we're planning to spend over the next 5 years is 152 billion in terms of capex. The bulk of that, or close to 50%, will be dedicated towards Transnet Freight Rail. The rest will be split across the various business units. But it's quite an extensive program over the next 5 years. So the intention is to reverse the decline or the decay in the overall network, and then also to maintain the network so that we have a more efficient, optimal network. So that's the investment over the next couple of years. Historically, we've gone to the international capital markets, like the debt that we've raised or signed today, the facility that we've signed today. But I think as we evolve, it's important for us to then incorporate and bring in initiatives like the PSPs. That you bring the private sector in. There's obviously capital that's willing to be deployed in that space. But I think also if you look at just generally in South Africa, our local capital markets are quite deep and liquid. So we'll continue to use both sources of funding. The initiatives that we have with AFDB, the facility that we've signed a couple of weeks ago with NDB. So we'll continue to use almost those generic sources, and we will also then branch off into using PSPs and the various other options that we have from a sources of funding perspective.
Sir, thank you so much. And I certainly hope those inroads that you're making towards improving Transnet certainly continue into the future. But that's where we have to leave it for today.
Yeah. Thank you very much. Thanks for having us.
And that's how we wrap up this episode of Focus On at the Connecting Africa Conference 2024. From me, Kiamogetse Mosepele, and the CNBC Africa team, it's goodbye for now.